What is up, everybody? Today was FOMC. As you can tell, we have some crazy action um, from last night into today. But I'm here to show you how you can navigate things like FOMC with some pretty good accuracy, honestly. So, always keep in mind where we are within the quarterly theory cycles. So, taking a look at the month, we are currently manipulating upwards. And so, where is it likely to manipulate to? A higher time frame PD array. I believe that is a daily or it is a weekly fair value gap. Yes, that is a weekly fair value gap right there. And so I believe that that is our manipulation target before we start distributing down a little bit more. And then for the week, what do we have? Today was Wednesday, right? And so Tuesday, I believe we manipulated below the true open. So I came in today bullish in terms of price. And I wanted to see first a retracement back into this 4-hour fair value gap before any kind of move back up. So I had that marked in the pre-market. So let's take a look at, the price action from last night. London and Asia consolidated a lot, right? Pretty much the entire night. Asia typically always consolidates. London, we came down, shot up above midnight open, taking out Asia's high and dropping. You could have taken a short there, turtle soup it, and then taking some partials. Obviously, it didn't hit any kind of significant low here, but because of that, I had no kind of no bias really yet. I was leaning towards short-term bearish, like for the morning, and long-term bullish for the day. And that's exactly what happened, right? I waited for the news drop at 8:30. If we had pumped up, I was pretty confident in shorts right at the start of the third quarter for the distribution of the day. And that's exactly what I did. I took shorts right here at 9, marketed in, and took profits below midnight open and also targeting this low right there. Because of FOMC later today, I knew there was going to be some sort of choppiness, and so I did not want to hold longer than I should have. And so we dropped in pre-market, and then right then and there at market open, we shot right up, took out liquidity again, came back down, took out liquidity again. And so an entry you could have taken if you missed that pre-market one, well, it could have been, it was pretty hefty, but you could have taken this fair value gap or even this volume imbalance right there on the 5-minute, stops above the high, targeting that imbalance on the 4-hour that we wanted to see price tap into. So let's take a look at how much that would have, if you had done it from the volume imbalance, you would have risked a little over $300 for a profit of about 1,000. So a 1 to 3. So that was a good trade in the morning, right? Sticking to the plan that we believe that price is going to come tap into this 4-hour fair value gap. And so we did around 12:35-ish. Let's go on the 1-minute chart. So 12:35, we dropped in. Now what? You start looking for bullish structure, knowing that there is FOMC, fully knowing that you could potentially get stopped out, but because you have that higher time frame context and narrative, you can go in with confidence. You could have gone in half size if you didn't feel that confident. So if you usually trade 1 NQ, you could have traded 5 MNQ to at least half the size of what you usually put on. And so price came in at 12:43 actually. Started creating low, a high, a low, a high, a lower low, lower high, lower low, lower high. Then we put in a higher low. And so now you want to mark out what high it needs to break to create a break of structure or a market structure shift. And you could have said that it was this high right there. If we get a close above this on the 1-minute, you can consider that a market structure shift. And that's exactly what we get right here on this candle. It was a nice long candle, displacement candle, leaving behind a very small imbalance right there, that fair value gap. So what could you have done? Could have taken a long position, which would have been filled right after, right? Even if it took your order a little bit to get in, you would have gotten an even better fill, right? Because it kept dipping. Risking about less than 250. The first trade you risked 300, you made 1,000. Here you risk less, and because you have that bullish bias now, because we have tapped into that higher time frame PD array, you can target the high of day. That's 277 ticks. That's almost $1,500. Imagine the 1,000 you made here plus 1,500 here on one contract. That would have been a $2,500 day. And you couldn't have taken 2 contracts, left some runners. And where would your runner have gotten you to? You could have ridden it all the way to the end of the manipulation cycle for this continuation or reversal. That's almost 800 ticks. That's almost 3.5k. It actually did hit 800 ticks, a little more. So one contract would have nailed you way more than 3,500. So that would have been a sick trade. I did not trade that because I did not feel comfortable trading it, but I did paper it. And that's exactly, it played out to the T, right? My funded accounts don't have the cushion to be able to play news like that, but once I start building that up, better believe I'm going to start taking these plays, because at the end of the day, price will follow higher time frame context and narrative. News is just a catalyst to get it to where it needs to get to. You should not be afraid of news. I know a lot of people say, oh, I'm not trading this day because FOMC. Okay, fine, go ahead. But really, if you look at the higher time frames, I mean, price is pretty clean. Don't pay attention to the wicks. Wicks do the damage. The bodies tell the story. And we've been bullish for a couple days now. Look at that. So aiming for our manipulation for the month target right there. Following week, if we can hit this by the end of the week, we have unemployment claims tomorrow. And then I believe we have something else on Friday. We have PMI on Friday. So pretty good news drops to definitely manipulate us into here. And then next week I will be turning bearish. Of course, seeing as to what the structure is, that is very important as well. But today, 2 solid trades. 3 solid trades, really. That one in pre-market, the one after market open, and then the one for FOMC. You could have banked on all 3. You could have had a stellar day. So that was FOMC in a nutshell, guys. I hope this was beneficial and helpful. And if you have any questions, tap into the Discord. Always there to help, guys. Later.